Now, one of the world's largest asset managers says progress on AI, particularly from China, will be a huge opportunity in the years to come. Well, Brookfield is investing tens of billions of dollars in data centers and other infrastructure, betting that AI will become even more widespread in the economy. Now, the firm's chief executive, Bruce Flatt, sat down with me for a wide-ranging interview.
The thing that I guess that hasn't really been factored in yet is that data center build out really only started 10 years ago, and it was just getting started for cloud, and then the ChatGPT moment happened, and the amount of increase in requirement to train models and for learning is very, very significant, and we're talking trillions and trillions. So the opportunity for us, as we've always tried to move our backbone of the global economy along with what's changing in the world. And increasingly today, the world is digitalizing, and the final step of all of that is providing compute capacity. And so we continue to work on opportunities like that, but these are large, large sums of money. Some of these sites, like a 1,000 megawatt, 1 gigawatt data center site, is with compute capacity, power to compute capacity all the way through, is $50 billion. These are almost unprecedented investments ever seen in hundreds of years.
But are we overestimating or underestimating the pace of change that this needs to get done?
You know, I would say you never know at the moment in time. But if I had to guess, we will. Everyone gets excited sometimes, but in the next 10 years, we will look back and be extremely surprised at the progresses that have been made. And probably the most important thing is that really what's happening is that it's the application of artificial intelligence into service businesses and industrial businesses, and the compression of the component of labor. And because of that, the productivity advances are going to be very significant. But that's going to be good for America because it means you can reshore capacity that you couldn't have made in the United States before, and that's going to continue to happen over the next 10 years.
Has DeepSeek changed anything for you?
I think all it does is show that when advances get made, they continue to get made, and progress, smart entrepreneurs figure out another way. And I'd say it makes the point. We are going to have better technology every day. We're all learning, and I'd say for us, what's really important is we provide the backbone of all of that. So we're providing the green power, we're providing the data center, we're providing the compute capacity, we're funding all of that, and that's different than we don't own a competitor to DeepSeek. If you did, you might worry about whether you had that. What it does mean probably is that there's more capacity required, which means they need more of our backbone. And as you bring costs down with anything, more use cases come about. And that's what's going to happen in the next 10 years as we evolve this business.
Bruce, if you're sitting in Europe, there's concern that actually you're being left out because China's going one way, the U.S. is America first. You worry about inflationary pressures and trade wars. What does that mean for Brookfield? Are there opportunities to be had?
Again, we're a local investor in countries. We're building out data centers all through Europe. We have the largest builder of data centers in Europe. We just announced a big deal in France for $20 billion. In all of our businesses, we continue to invest across the backbone. We're local players in local countries. We sell local things. And sometimes less money being available and less positivity means greater opportunity because there's less money available and therefore the opportunities are better. And so we're always selective with what we do, but I think there are still significant opportunities in Europe.
On private credit, you're a big player in private credit. Where do you go from here?
This business is going to get bigger. Our business and the industry in total is going to get bigger and bigger because this is just capital being pushed off of banks' balance sheets. It's less regulatory friendly on their balance sheets. They don't really want it on their balance sheets. It's being pushed to sponsor groups who are usually lending in the area where they have a lot of expertise. And our two biggest businesses today, or I guess three biggest businesses, are real estate infrastructure and direct lending in corporates, because we have a lot of expertise in those things. We just bought an asset-backed lender called Castle Lake, and we're going to continue to build out the business merely because I think the scale opportunity is there, and our clients can earn extra return in private credit than they can just buying bonds in the market. And that's really we're here for our clients. We're here just to service them, and if they can earn an extra 100 basis points over what they'd get somewhere else, this is a very exciting place for them to put money.
How much bigger do you think this market can get? Again, if you're good, it seems like you're doing really well, but if you're in that mid-level...
Yeah, we're $300 billion today. I think it can be much, much larger.
In what kind of time frame?
Look, it will grow. With us, we always try to grow methodically. Right. Once in a while, we buy something, but we grow methodically. It can grow. It can double. It can triple. It can quadruple over the longer term, and we'll just keep building it out. But I'd say the thing we want to make sure with every business we have, we're super responsible. Mm-hmm. The foremost thing we have to do is make our clients the returns we promise them. And if we can do that, this business will be very, very large 25 years from now.
Do you expect consolidation in that space, in your space?
Look, the asset management industry started from nothing 30 years ago, circa 30 years ago. There are 5 or 7 big players today. Some of us have done acquisitions to add in other sources of skills into the businesses. We've done some, others have done some. I think there's going to be it's never, one size never fits all, but there's going to be some very large players. Mm-hmm. We're one of those. And then there's going to be some niche players that fit a certain area. What's happening in the middle is so far in the last 18, 24 months, it hasn't been easy for them to raise money. We raised $135 billion last year in our asset management business. Not many others can raise that type of capital.
Here's more of our conversation with the Chief Executive, Bruce Flatt.
What we try to focus on are long-term trends and focus on the long ball. And within that, there are going to be fluctuations all the time. I'd say everything that has happened over the last year is all positive to the long-term theses we have. We're still going to digitalize the world, and we're going to do it faster, and we're going to have more. We're still going to deglobalize, and we're going to do it faster, and we're going to have more. And we still are going to transition to renewables, maybe not because of renewables, but because we just need more power. So I think all those three trends are maybe more important today than they were before. So we don't get too wrapped up in the day-to-day effects of what's going on rates or economy or different things like that.
Has your U.S. business been impacted at all with some of the Trump policies?
What we do is go to great countries, invest in great businesses or assets on the backbone of the global economy with great people. And we don't trade over borders. So in the United States, we have $500 billion worth of assets. They're all local assets. We sell the goods to local companies and people, and we're a local company, as we are in every other country of the world. So there's no doubt, there's always some ramifications on everyone, good or bad. But for us, it's pretty small because we just invest in places and we don't trade over borders.
Bruce, when you look at regions around the world, where do you see the big next opportunity?
We're in 30 countries, and therefore, and the success of our investment strategy for many decades has been to have global business and to be able to pick the spots where value and price don't intersect. Where markets are up a lot, we probably were selling things, and where markets are down a lot, we're probably buying things. And so I would say it always differs. In Europe, for example, it's a value market. Multiples are lower. In the United States, the trends behind what's going on in the United States are very large. So they're just different opportunities. But I would say if I had to pick a spot where more capital will go over the next 18 months, it's probably in the United States.